Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets.
Ice raw sugar in New York. The core of the bullish support here for the market continues to be the lower time, highlighted in dark blue on my daily chart, the December 2020 to April 2021 bullish shift pitchfork, currently at 1831. Though since November last year and until last week's changeover gap, the late October 2022 to early January 2023 bullish Andrews pitchfork, which is highlighted in purple on my daily chart, seemed to have taken over the running higher of this market. That more recent relationship now seems to be over. The most that can be hoped for any of those who still cling to these is that the market may try and run up along the underneath of the lower time, currently at 2110. Interestingly, there are some possibly still good-looking supports below. There is a November 2021 high at 2069. The middle time, currently 2056, of the December 2020 to April 21 bullish shift pitchfork. Then there is the 50% Fibonacci line for 2023 at 2064. Then the November last year high at 2048 and the rising short-medium moving average, currently 2060. All this is in the shadow of January's monthly key reversal up. Anyway, a few weeks ago I took a look at the longer-term monthly charts. And there was the answer to the question I'd previously posed of where next. We had a secondary, harder reach target X in the 2140 area for the diamond bottom formed over 2019 to 2020. In late January, the market rose up towards the resistance of the neckline, currently at 2204, of the August to November 2021 complex head and shoulders pattern, which is highlighted in bright red, and where prices have peaked and been capped ever since, with the exception of last Tuesday, which increasingly looks like an aberration. I have a suspicion that despite it being a changeover gap, the market may well try and fill the gap. Originally was 2065 to 22 even, and now 2104 to 22 even. However, I'm minded to perhaps set aside the peak of last Tuesday, instead look for a sufficient gap filling to be up to 2 Fridays ago low of 2123. I know this is an optimization, and to some perhaps too much of an optimization, but I'm minded right now to look at it that way, especially if prices establish themselves over the middle time. Ice Europe, white sugar in London. Changeovers. Well, they produce some strange events here. Since mid-September last year, this market has been dominated by the one action, the changeover gap that happened back then. One can say a lot of things about what happened beforehand, but that changeover gap seen there on the continuous daily chart above was really big. There has been a number of attempts since to try and fill it, but it has been a laborious process. The most recent attempt has been quite valiant, reaching up over the middle time, currently at 576.90, and highlighted in dark blue of the late October to late November 2022 bullish shift pitchfork, as well as the neckline, currently 587.70, and highlighted in bright red of the August-December 2021 complex head and shoulders pattern. This has led to today, despite being a bearish day, to be the highest high since that September last year move. Indeed, the seeming last chance resistance of the November 2016 high at 590 even was the only thing that has seemingly capped the current rise. Overall, despite the decline today, the integrity of the bullish shift pitchfork and of the rising neckline, which is in parallel step with the middle time, still seem to be driving this market higher. And I have a strong suspicion that the changeover gap may well see further attempts to fill it. Sugar white premium spread. We're well into 2023 and this chart continues to be very colourful. Many things are going on all at the same time. Okay, so I've previously spoken about 2 big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021, highlighted in dark blue on my daily chart, my weekly chart, with the market at the moment in between the lower time below, currently at 91.25, and the middle time above, currently 165.25. I've said this so many times before, and I will repeat it again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack. Next, we have an ascending expanding wedge pattern, highlighted in bright red trend lines, and above the current market. This was formed between mid-April to late November last year, and that's currently 164.25 to right off the top of my weekly chart. To me it was, and still is, not the best looking of such wedge patterns, but it is also still there. And it comes with all the possibilities such a pattern invokes. The most recent activity has been the move up to the slowly rising long moving average, currently 128 even, as well as the 50% Fibonacci lines at 128 3/4 and 131.5, and also the June 2020 high at 134 even. This looks to have petered out now, and prices are below all these, despite, well, those still over the declining medium moving average, currently at 118.5. I'd recently ended up potential target X below for such a late November last year to date action as a possible bear flag, bearish halfway hesitation type pattern, down in the 72.5 zone, just below the purple neckline, as well as the secondary much harder to reach target X1 for the previously mentioned expanding wedge pattern, and that is way down in the 46 3/4 zone. For now, I will retire target X as the idea of a bearish halfway hesitation bear flag looks very, very dead. Though I'll still keep target X1 in mind, obviously not that frequently. I think the final nail in the coffin of this bear flag, bearish halfway hesitation, was last month's monthly key reversal up.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.